here's a number that might make you a little bit sick to your stomach and question whether or not you should finish the whole episode, and I hope you do. To buy a medium priced home in Shoreline, it costs about $5,000 a month, and that includes your mortgage payment, your taxes, your insurance, and the maintenance. $5,000. So it just seems so much simpler to rent because a house about the same size in that same area is going to put you back around $3,000 a month. So does it even make sense? Let's talk about the numbers. My name is Emily Hazard. I'm a real estate agent at Keller Williams, Greater Seattle, and today I'm going to get into the real numbers. I'm not going to be talking about vibes. I'm not going to give you that speech about how real estate is historically a good investment. I'm really going to break it down for you in 3 distinct neighborhoods. That's going to be Shoreline, Bothell, and Snohomish. I'm going to tell you what I actually think and not just what you want to hear. Now, before we get into it, I kind of have to set the table for you guys because I think when people have this discussion, they look at what they're paying in rent and then they look at what they're paying in mortgage, and it's not really an apples to apples sort of situation here. When it comes to buying a house, you're going to have more than just your mortgage payment. And a lot of times people don't really understand that in the first year of home ownership, everything that can go wrong will go wrong. And so you need to have some reserves. The bank is going to make sure that you have reserves when you qualify for a loan, but that's not just for home repairs either. You're going to need to pay taxes and you're going to need to pay the utilities as well. First, I'm going to get into Shoreline. So Shoreline is just on the north end, right above King County. And it has a brand new light rail. So it's got a lot of access to downtown. It's well positioned. And they've done a significant amount of development over the last 5 years. It looks totally different than it used to. The median house price in Shoreline is right around $770,000, which is actually down 3.2% from last year. If you put 20% down, which is about $154,000, your loan is going to be for $617,000. At today's rate of 6.75%, your principal interest and payment is about $4,000 a month. Then you need to add in your property taxes, $640 a month, your insurance, $150 a month, and maintenance around $640 a month, which brings your total monthly cost to right around $5,400. The average rent for a 2-bedroom in Shoreline is right around $2,200. That's a $3,200 gap every single month. That's $38,000 a year in extra housing costs. So in this market, buying in Shoreline does not make sense unless you intend to hold on to that property for more than 2 years. Because in 5 to 10 years, these properties are going to appreciate more than that 3.2%, and you are going to see a higher return because you bought at a lower price point when the market was softer. Bothell is a bit of a different situation. It sits on the top of Lake Washington and has access to both Seattle and Bellevue and Redmond. So it's a place that has seen quite a bit of development, just like Shoreline, but is a little bit further north and has a higher medium price point. If you are looking to purchase in Bothell, the median price point right now is $800,000. Using $800,000, you need 20% down. That's around $160,000. That has a loan of $640,000. At 6.75%, your principal and interest is about $4,150. Property taxes are sitting right around $670. Your insurance, again, around $150. And maintenance, you're gonna see around $667. Woo! That's a mouthful. Bringing your total monthly cost to $5,637. Rent for a 2-bedroom in Bothell is $2,294. The gap in Bothell is $3,340 a month. But this is different because Bothell has a different school district. If you have kids and you're thinking about what you want to do for the long term, Bothell is a great place to buy because it's going to get more and more challenging to get into this neighborhood as the price points begin to come back up. So right now in a softer market, you have more opportunity to get into a property that perhaps won't be available for many years to come. Now, Snohomish is one that surprises people. It's probably one of the most underrated markets in the area. The median price point is right around $696,000. It's our least expensive one today. And you're gonna get a lot more square footage with that property than you would in Shoreline or Bothell. So if you're putting 20% down on this house, your loan is gonna be for about $557,000. Then you're going to have a mortgage payment, so that's gonna be right around $3,600. Taxes are gonna be $580, insurance $150, and maintenance $580, bringing your total cost to $4,910. But the average rent in this area is $1,940, which makes your gap around $2,970. That's still so much money, you guys. But the vacancy rate in Snohomish right now is 6.1%, the lowest in the region, meaning the rental market is tight and is going to get tighter. Snohomish is where the math really begins to get interesting because it is a lot of extra money, but as opposed to that money going to somebody else's mortgage payment, it's actually going to pay off your loan. So let's talk about the equity argument. Should you just rent forever? I mean, some people do, and perhaps that is the path for you, in which point you don't need me to tell you that, right? But in a year with strong appreciation, like the 8.85% we saw in King County, you could build $60,000 in appreciation plus principal and down payment. But that only really makes sense in an appreciating market. So right now, if you are thinking about buying and making this huge leap, what I would do is make sure that you get it under market value. So try and get yourself a deal or an agent who is willing to work with you on ways to have the seller provide concessions so that it isn't such a burden for you to take on that first year, given that housing prices are still high and interest rates are still high, so something's got to give. And if we are seeing that there are more and more houses on the market, fewer buyers, that means that there's been a swing and buyers have more of an advantage right now. So here's the verdict. Does the data support renting or buying right now in a down market? Renting makes a lot of sense. Coming up with the money for a down payment and the extra amount that you are going to need in fees is a lot to stomach right now. I would say though that if you are looking to purchase in a neighborhood that is historically hard to get in, this is your opportunity because there are more and more sellers struggling to get their home sold and prices have been dropping. It might not feel like a lot, but this is the first time since pre-COVID that we have seen this amount of inventory and this many price reductions. So whether or not you decide to buy now or later, I hope that you will give me a call because I would love to help you out on your journey. Thanks so much. Don't forget to hit the subscribe button so that you never miss another episode. And I can't wait to see you next time. Bye.